It's Friday, January 31st. Welcome to This Week in Impact, where we bring you some of the most interesting impact investing and sustainable finance stories of the week. I'm Brian Walsh, and I'm joined by ImpactAlpha editor David Bank. Today we'll discuss how mission-driven funders are responding to Trump's chaotic first few weeks, which included a federal funding freeze. Plus, we'll go over some highlights from this week's call about the impact investing scene in Brazil, home to the COP30 climate summit this November. And finally, we'll look at how machine learning and AI can be harnessed for mission-based lending. That's all coming up on This Week in Impact. Hi, David. Good to be with you.
Great to be with you, as always, Brian.
All right, David, let's start with the piece you and Amy Cortese wrote this week, examining the fallout from President Trump's executive order to pause federal loans and grants to review their alignment with Trump administration foreign policy, even though those funds had already been allocated by Congress. Given the scale and suddenness of this shift, how are mission-driven funders scrambling to adjust?
Well, Brian, it was a crazy week, as folks know, and full of both bluster and then reversal. But I think that message is everything is on the table, and many things are at risk if they haven't already been shut down. So we did a piece that was about the scramble by some lenders, particularly Open Road Alliance, to try to bridge some organizations over the funding gap. But really, it's tiny compared to the scope of the federal government. So all kinds of foreign aid, USAID funding has been halted, and those programs have actually been given not just a funding freeze, but a stop work order. Some of that was revived, as folks know, like some of the HIV treatments and other things. And then that was followed by the broader funding freeze, which lasted all of a day, or actually never went into effect because the judge had stopped it. But again, it's a warning shot and a sign of things to come as the administration seeks to root out what they're calling woke ideology, in particular DEI, or diversity, equity, and inclusion programs are completely in the crosshairs. And this does affect investors in private companies as well, even though the orders mostly go towards government programs. But for example, an earlier executive order dating all the way back to the Johnson administration, barring discrimination by federal contractors, was rescinded. And companies, have been practicing what folks are calling anticipatory obedience, and big brands like Walmart and Meta and Harley Davidson and John Deere have rolled back their DEI initiatives in just the past year. And so a whole raft of investors who have been championing diversity and equity and inclusion, are kind of on warning that those projects are going to come under increasing pressure.
Now, one of the stories that we followed a lot last year was the Greenhouse Gas Reduction Fund, that $27 billion that was part of the Inflation Reduction Act under President Biden, $27 billion given to the Environmental Protection Agency to then grant on to a coalition of funders to deploy across communities across the U.S. So what is the status of that funding and those awards?
Well, this was somewhat anticipated, and as the awards and the contracts were finalized last summer, the pains were taken to kind of, Trump-proof that spending. So the money, as I understand it, is sitting in an account at Citibank, but those GGRF, Greenhouse Gas Reduction Fund, recipients, and these are the coalitions that are kind of the intermediaries that receive the funds before they pass them down to the projects themselves, did get a notice from the EPA that it had paused all funding actions related to the Inflation Reduction Act and the Infrastructure Investment and Jobs Act. And so there's a lot of confusion in that world about whether the money, is really safe, or whether, via legal or contractual, hooks that the EPA may still have that it won't be able to be deployed. Some of those grants had already gone out. There was something like $250 million put out by Climate United to electrify trucks at ports, mostly in Los Angeles and Long Beach, that are called drayage trucks. There was $175 million that another coalition called the Coalition for Green Capital had put out for electric buses and energy retrofits in buildings. So they were rushing to put put the money out, but they obviously didn't get anywhere close to that $27 billion out the door. And I think I think they're talking to their lawyers as we speak about what the future holds.
So for now, a lot of that funding is just sitting in a limbo of sorts.
Well, I think there would be many lawsuits and lots of wrangling over, what contracts mean with the federal government that were done with the last administration. So that money was contracted. We were told that it was safe and that they had anticipated, the worst case scenario. But given the aggressiveness with the administration is going after programs with which they disagree, I think they have many tools at their disposal, and electric vehicles, charging stations, all those Inflation Reduction Act initiatives are directly in their crosshairs,
including billions of dollars allocated by the EPA for improving the nation's water infrastructure, including things like replacing lead pipes and removing forever chemicals from the water supply.
Yeah, well, again, those are just some of the things. I mean, the scope and scale of this kind of left everybody kind of agog this week in terms of what really was on the chopping block, and some of it may have been performative and sort of a warning shot, but and then it did get rescinded the next day because there was a bunch of pushback. But I don't think anybody should be fooled that they're not coming after all of those kind of programs.
All right. Well, certainly more to unfold in the coming days and weeks as this all plays out. But you can read David and Amy's article on ImpactAlpha.com. We'll also have a link in our show notes. But let's take a quick break. And when we come back, the impact investing scene that is Brazil.
Maybe it's a story in the brief, or our monthly Agents of Impact calls, or an exchange in one of our subscribers' Slack channels. Impact Alpha is all things impact. Hi, I am Slayma Bibel, co-founder and chief operating officer of ImpactAlpha. For more news and insights about the world of impact investing, join thousands of others finding alpha and impact. Visit impactalpha.com/subscribe to learn more.
Latin America's largest country, Brazil is set to host the annual climate summit, COP30, in November, just as the U.S. is set to exit the Paris Climate Agreement. David, we had a call this week about unlocking impact and climate alpha in Brazil, which is seizing leadership not only on climate, but in impact investing more broadly. So walk me through some of the highlights of the call.
Well, the hook is, of course, that COP30, the global climate summit that happens every year, is set to happen in Belém in Brazil in November. That's up in the Amazon area, and so Brazil has taken leadership, and it's kind of interesting as a kind of global South leadership on climate, as the U.S., as you said, sort of leaves the field and leaves the Paris Agreement, as it were. Although technically, I believe they'll still be in the Paris Agreement in November because it takes a year to withdraw. And so Brazil has been gearing up its own climate bona fides. The deforestation efforts under President Lula there to prevent deforestation or reduce it have been somewhat effective. And they've also taken it more broadly. And there's a national policy called En Impacto that is one of the world's kind of most comprehensive, impact investing policy initiatives to bring private investment to bear, not just on climate, but on kinds of social inclusion and the bioeconomy and kinds of initiatives that Impact Alpha readers will know. So we had Giselle Viana, who coordinates that strategy at the Ministry of Development, Industry, and Foreign Commerce, give us a little preview.
And this year, we're really building on this track to COP30. We want to build a very, very powerful track of really supporting all the actors involved in climate change solutions, and also bioeconomy and impact, to work with them throughout the year. So we have business roundtables and many partnerships to arrive in COP30 with a showcase of Brazilian solutions and partnerships with you guys, with whoever wants to partner with us, so we can really build these bridges and make the Brazilian impact ecosystem more connected worldwide.
So I know from our coverage that family offices are big in Latin America in general, and they are becoming increasingly interested in impact investing. Is that right?
Well, yeah, I mean, it's interesting. Brazil, just, like the US and other countries, has a very wide gap of wealth and inequality. But again, the wealthy families sometimes are split themselves between the younger generations and olders. And Right Capital's Fernanda Camargo joined us. She manages the wealth for over 40 Brazilian families. And she's got them investing at least a small portion of their holdings in impact investments.
It's if you live in São Paulo, your kids cannot play outside in the street. And also you would not walk around with your cell phone. So, there are, things that if we remember when we were kids, that was not true. So I think this second generation, they want to build, a better world, and they're more engaged.
Lest we get too excited about the impact investing potential in Brazil, I think we had a little bit of a reality check on the call as well.
Yeah, we know at ImpactAlpha that happy talk only goes so far. And when you try to follow the money and see what's really moving, it's sometimes a different story. Fabio Elperovich at Fama Ray Capital in Sao Paulo has been working this turf for many decades and offered this cautionary note.
So as Ricardo mentioned, only 1% of the global impact investing is made in Brazil, but only 0.2% of the Brazilian investments are impact. So for Brazilians, it's even worse. And the taxonomy is yet to be made. So there are some funds that claim to be impact funds, and they're not. So despite the fact that we have huge opportunities here in Brazil and a lot of needs, there are very, very few people investing in impact.
But Fabio, who's got tremendous energy and a number of very interesting funds and initiatives, is still fighting the good fight and making the case that not only is there impact to be had, but in a place like Brazil, there are returns as well.
So they're taking too much risk in their traditional investing, but they are averse of investing in impact, even though impact investing offers less risk. And these trade-offs of return, it shouldn't happen in Brazil because we have huge opportunities here in Brazil for impact, either social or environmental, and very few people investing in. So if there are very few people investing in, the opportunities are huge, we can provide greater returns.
All right. Well, you can see a write-up on the Brazil call along with a link to the full video on ImpactAlpha.com. For now, let's take one more quick break. When we come back, we'll take a look at how machine learning and AI can be harnessed for mission-based lending.
The ImpactAlpha Podcast Network is proud to amplify smart conversations by and for impact investing professionals.
Welcome to the Market Makers podcast, where you can listen in as we interview leading asset allocators, investors, founders, policymakers, and more, who are all working together to build an inclusive economy.
Join Troy Duffy and Lenore Champagne Byrne for the Market Makers, part of the ImpactAlpha Podcast Network.
David, we had a guest post this week offering an optimistic take on the potential for AI to be used to improve mission-based lending. The piece highlights a collaboration between Accessity, a community development financial institution, and Radiant Data to streamline the underwriting process through AI and machine learning, which could potentially enhance efficiency and decision-making. Now, David, how do these possible benefits balance the concerns and the challenges around the risk of perpetuating biases in lending?
Well, this piece was interesting as a, kind of one of the many examples of how impact investors, agents of impact, are using AI to just improve their processes. And in particular, the notion that there are ways to underwrite risks that can be more inclusive because they have a more comprehensive view of than just a sort of simple credit report. So Accessity it used to be called Accion San Diego, and they're a CDFI, a community development financial institution, and they have a mandate really to serve customers that traditional banks overlook, and they were very interested seeing how they could use AI to do that. So they enlisted Radiant. One of the interesting things about that process was they didn't have enough bad loans to feed into the model to understand what had gone wrong. They had done, actually, I suppose, a pretty good job underwriting in the first case, so they didn't have as many bad loans. So they had to kind of tweak the data set, as it were, to show what the bad loans were. They had a bunch of good loans, but it cut down their underwriting time by something like 90% and increased their accuracy rate, and they're off to the races to be able to offer more loans. So it's just a sort of good and relatively simple, at least to describe, not to maybe to create, but a relatively simple example of the very sort of workaday advances that are possible with AI.
And what strategies do you see as most effective for other agents of impact and mission-driven organizations to implement AI responsibly while staying true to their core values?
Well, we have an interview on the Agents of Impact podcast coming up next week with Ravit Dotan, and she's an expert on responsible AI in Pittsburgh. And she made the case that the guardrails that sometimes the AI companies fight against actually can be pro-innovation.
The magic is understanding how you actually have better innovation with trustworthy AI. It's true that sometimes when we design processes, they hold us back, but that's really more about process design more than about, AI safety or trustworthiness. And I think that at the end of the day, it is pushing innovation forward, right? If you understand how to develop your AI properly, it is just going to work better for you, the company, for your stakeholders, for society at large. But you have to design those processes, right, in an informed way that's not going to hold you back.
Now, of course, David, AI has been in the news this past week or so after DeepSeek kind of came out of the gate and stunned the AI world and helped lead to a market sell-off of a lot of AI and AI-related companies earlier this week. What's your main takeaway from that?
Well, there's obviously the market implications, and I think hundreds of billions, if not trillions, of dollars were erased in some of the companies that were purported to have a lock on AI. And I think, as an old tech reporter, it was sort of obvious that no one was ever going to have a lock on it, and the disruptors and the innovators keep coming up from below, and DeepSeek just kind of accelerated that process. But I think DeepSeek is just emblematic of the changes that are going to be coming down the pike on IP, on copyright, on bias, and then things like national security and everything else. So we're in a whole new world here, and it's moving much faster than even the people who were telling us how fast it was moving thought it was moving. So we'll see, how the other processes of society can adapt to it. But the game is on.
Yeah, as Scott Galloway, I think, noted earlier this week, in any market, you have the bifurcation here, and maybe OpenAI and its other peers are more of the Tiffany's, and DeepSeek is maybe the Walmart brand, right? So you have a high end and low end in the market here.
The innovation always comes from below, as the tech folks know.
All right, but I think that's a good place to leave it. You can read the full guest post from Accessity and Radiant Data on responsible AI on ImpactAlpha.com. We'll also have David's full interview with Ravit in your podcast feed next week. But for now, that's going to do it for this episode of This Week in Impact. Thank you, David.
Thank you, Brian.
And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh. We'll see you next week for more Impact.